Welcome back after the break to discuss about economy and much more. I have with me Saugata Bhattacharya, independent economist and MPC member. Mr. Bhattacharya, welcome. I want to understand with you first regarding the tariffs. Now it is a reality. We have to live with it. At the same time, India is maintaining that negotiations are on. How much impact do you see this may have on growth per se? And more importantly, in your MPC minutes, I saw that you have mentioned about this risk. Now it is playing out.
Yes. Good afternoon. Thank you for having me on your show. It is a problem. There's no doubt about it. If we presume, because we don't really know what scenarios can evolve, potentially evolve. But assuming that the 50% tariff remains for the rest of the year, for FY26, this will potentially have an impact. It's difficult to calculate what impact. I mean, you've seen various economists' estimates, 6.2, 6, 6.4, etc. So difficult to estimate as of now. But to my mind, if under the scenario that the 50% tariffs are still maintained, my sense is that it's not just the direct effects, the direct hit on exports, the secondary, tertiary, and potential other effects are likely to be relatively strong. So you're already hearing stories about the MSME sectors, in particular the labor-intensive segments, textiles, leather, potentially some impacts on other related sectors, the hit on affordable housing, which is a tertiary effect that might come in. We wait and watch what happens, but without doubt, this will have an impact.
Mr. Bhattacharya, pleasure talking to you. Mansi Dave this side. And now let's talk about the headwinds and the tailwinds as we see. Starting with the positives, the tailwinds, robust demand and stable input cost are cited as the tailwinds for India. Now, how sustainable do you think are these positives? And on the flip side, what are the risks you see which can concern the markets and the Indian economy at large?
So you're absolutely right, Mansi, that there are tailwinds, which potentially we should see in the GDP growth numbers tomorrow. For one, as you mentioned, commodities prices have been fairly low and are likely to remain low for the rest of the world. Whatever happens to inflation in the US, potentially because of the other tariffs, other diversion of other commodities into other markets, manufacturing prices are likely to remain low. So from the inflation side, that's definitely a tailwind. And on top of that, the potential proposed cuts in the GST that we are hearing about. Let's see what the final contours are. So that should also push prices lower, at least in the near term. That's another tailwind. The monetary policy easing that has happened till now. A very steep 100 basis points reduction in the repo rate, the liquidity infusion, rapid transmission into bank lending rates, etc. So all of those potentially can have some counterbalancing impact, which is the reason that I'm saying that the actual hit to the GDP growth from the tariffs will potentially might not be that big as the immediate numbers suggest. It will be strong, but not as big as the immediate numbers suggest. But on the flip side, on the headwinds, obviously the first one is the loss of a significant segment of the very large market for Indian exporters, which is the US. We export more than $100 billion, exported more than $100 billion last year. So that's a significant chunk of the market. Official estimates that I have heard about, that about $50 billion worth of commodities might be impacted. How much? It's difficult to say, but these are very low margin businesses. So that's the immediate potential impact. In terms of the tailwinds, the other one that I forgot to mention are the series of FTAs that we are intending to sign. Two, we have already signed the EFTA with the European Free Trade Association, the one with the UK. There are others in the pipeline. The biggest one is the EU, the free trade agreement. So that's another potential gains of markets and the attempt to diversify other export markets.
Mr. Bhattacharya, one of the point of debate has been private capex in the past, and with the tariffs now coming into effect, do you think there will be an impact there as well?
Unfortunately, yes, because on the one side, from the private sector investment, quite apart from all the external uncertainties that come in, I think for some critical sectors, particularly metals, some of the others, because we don't know what kind of demand for these commodities are likely to play out. So my sense is domestic investors will wait and watch for a little while. And on the other side, the government's capex, as you know, I mean, they have retained the capex level at the same FY 26, at the same level of FY 25, and all those states capex, from whatever we see from the data that is coming in, that states are borrowing more partially to fund the capex. But again, there are limits to that. On the other side, again, on the flip side of this negative commentary narrative, we just recently heard a very major private sector project company saying that their order books have improved significantly. Private sector led order books for construction has improved significantly. So my sense is that some heavy potential pending investments will potentially go through. Again, in the metal spaces, and as we have seen in the past, I mean, 2 or 3 in the petrochemicals complex, in the renewables energy, in some parts of chemicals, specialty steels, etc. So those will potentially add some capex to the project pipeline.
And on that note, we let you go, Mr. Bhattacharya. Thank you so much for giving your time to ET Now. It was quite an insightful interaction. Thanks a lot.
My pleasure and privilege. Thank you.
And on that note, we are completely out of time on this edition of Markets at Noon. From the entire team who has put up this show together, thank you so much for tuning in. Up next is Commodity Central. Stay tuned with ET Now.